Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. So, you've just settled in after the long holiday weekend.
Probably hoping for a bit of market quiet.
Exactly, but that is just not the case in the world of digital assets. Not at all. We have a massive stack of sources today. We're covering, well, the wildest ends of the spectrum.
From a single emoji moving markets all the way to global encryption.
All the way to the high-stakes future of encryption, yeah.
And that breadth is why this deep dive is so essential. We're working with data from December 1st, 2025, right off the back of Thanksgiving.
And prices have been volatile.
Very. But there's drama, there's macro pressure, national regulation, and, some really significant tech deployments happening all at once.
So our mission is to cut through that noise for you.
We want to deliver those essential nuggets of insight.
We're covering everything from, the influence of individual whales to how governments are actually using blockchain for transparency.
And then we're assessing the deployment of industrial use quantum computing. That's something that could really redefine security as we know it.
Okay, so let's unpack this immediately, because the market is definitely reacting to some high-profile figures. We have to start with the drama around Michael Saylor.
And his company, Strategy COE, MicroStrategy, as most people know it.
One of the largest corporate holders of Bitcoin, of course, and the whole speculation wheel is just churning based on one single post on X.
Right. It's the infamous green dots. That's all it was.
Just green dots.
And that one ambiguous post got over 3.5 million views.
Yeah.
It immediately started pushing narratives across trading floors everywhere.
Wow.
What's fascinating is just the sheer power of that centralized influence and what's supposed to be a decentralized asset class.
And I think the speculation is really fueled by some historical context here.
Exactly. Strategy COE, they'd said in a previous interview on what Bitcoin did, that they might theoretically have to sell some of their holdings.
But only if their shares fell below an extremely low threshold, right?
Extremely low. And right now, the current BTC price is hovering around $90,000, which is just miles away from that danger zone.
But the fear kicks in anyway.
The fear mechanism in the market still triggers instantly.
It really says a lot about market sentiment when a multi-trillion-dollar asset class can hinge on just deciphering an emoji.
It does. But, the counterargument is Saylor's history. He is a steadfast buyer.
Right.
And there's some optimism from a more recent, more coherent tweet about Elon Musk and energy being the true currency.
Positioning Bitcoin within that narrative.
Exactly. So if Saylor is buying, prices probably get a big push. But if he were to sell even a small amount, the short-term reaction could be pretty severe.
So that brings us to the bigger picture then, the macro environment. What does the overall sentiment look like coming into December?
Well, the global crypto market sentiment is still technically in extreme fear, according to the data.
But there's a shift.
There is a technical shift. The index number has climbed to 26. That's up from 10 just the week before. So it suggests that while caution is high, the market is absorbing risk a little better than it was in November.
And the date everyone has circled on their calendar is the 10th. Why does that one day matter more than anything else right now?
That's the Fed watch date. Federal Chair Jerome Powell is set to make a really crucial decision on interest rates.
And for anyone who follows this, the connection is immediate.
It is. Lower interest rates usually mean looser monetary policy, which encourages investment in risk-on assets. And crypto is firmly in that basket.
So if the Fed reduces the rate, or even just keeps it the same, that's seen as a positive thing. It avoids a liquidity drain.
Precisely. It injects confidence that capital won't just get drawn back into guaranteed high-yield traditional savings.
So the anticipation is that holding steady or reducing would be good for prices.
Exactly. An unexpected increase, though. That's when we'd expect a sharp downturn. And given the numbers right now, a global market cap of $3.17 trillion, Bitcoin dominance at 57%, and the price at $90,600, the whole market is just holding its breath.
Okay, let's shift from that volatile speculation to actual immutable deployment, because this is where it gets really interesting. El Salvador is doubling down.
They are. It's a bold decision to timestamp government documents on the Bitcoin blockchain.
This is a huge move for transparency.
It's a landmark move for institutional transparency and accountability, yeah. The Ministry of Foreign Affairs and the Ministry of Environment partnered with a group called Simple Proof for this.
So they're positioning themselves as a leader, but not in finance.
Exactly. Not for finance, but for institutional trust.
So how does this actually work, technically? I mean, we're not talking about uploading giant PDFs to the blockchain, which would be incredibly slow and expensive.
No, it's much more clever than that. The document is fingerprinted. It uses a cryptographic function, a SHA-256 hash.
Think of it like a unique digital footprint.
That's a perfect way to put it. It's a long string of numbers and letters for that document's exact content. And if you change a single comma, just one number, the whole fingerprint changes completely.
So changing one line item in a budget instantly breaks that proof of authenticity.
Instantly. And that fingerprint, that hash, is then recorded on the public Bitcoin blockchain with the exact time it was created.
And because the network is distributed and immutable,
the existence of that document at that precise moment is verifiable by anyone, anywhere, without having to trust some central government server.
That is accountability in action. But I have a question. If the whole point is decentralization, doesn't partnering with a single company like Simple Proof introduce a central point of failure?
That is a critical nuance.
Yeah.
And it's what the sources force us to confront.
The transparency is only as good as the process.
Exactly. The caveat is, if manipulated or incorrect data gets uploaded and fingerprinted in the first place, that incorrect data is on the blockchain forever. It's an immutable record, not an immutable truth.
I see.
The real public benefit is that citizens, opposition parties, they can verify that hash and hold officials accountable if the data is messed with after it's been fingerprinted.
It really shifts the burden of proof, and we're seeing this trend accelerate. Just a couple of months ago, the U.S. Department of Commerce decided to upload information onto 9 different blockchains for similar reasons.
It seems governments everywhere are starting to see the utility of the tech, even if they're still cautious about the asset itself.
All right, let's move on to the future narrative. Our sources are strongly predicting that tokenization is the next major institutional hype cycle for 2026.
Yeah, potentially overshadowing the narratives around DeFi and NFTs.
And the involvement of major players like BlackRock is really contributing to this shift.
I mean, if you connect the dots, this is the institutional enterprise-grade application of blockchain. This isn't retail speculation. This is about optimizing Wall Street.
And Nasdaq is being aggressive about it.
Very proactive. They are prioritizing SEC approval for their proposal to offer tokenized stocks, digital versions of traditional shares.
We hear the basic advantages, faster settlement, fractional shares, but what's the really profound structural impact here? What hurdles does this actually eliminate?
Well, the real game changer is eliminating counterparty risk and that settlement delay.
The whole T+2 thing.
Exactly. Settling a stock trade currently takes days, and you need these massive clearinghouses like the DTCC to guarantee the trade in that lag time.
But with tokenization?
Settlement becomes instantaneous. We're talking seconds. This requires a complete overhaul of that old infrastructure. So Nasdaq's proposal isn't just a new product. It's about proving to the SEC that this new structure is viable, secure, and ready to replace something that's decades old and, frankly, delay-prone.
The advantages sound really compelling, but where there's innovation and institutional money, regulation is sure to follow. Let's pivot to the UK.
Yes, the UK's new framework. The sources flagged this as a potential concern for the crypto world.
What is it?
It's called the Crypto Asset Reporting Framework, or CRF. It's effective January 1st, 2026. And it's a massive effort to formalize and monitor the movement of digital assets.
What's the technical scope of this? What are UK exchanges actually going to have to report on their residents?
This is where the detail really matters. Exchanges will have to collect and report highly specific transaction info. We're talking source and destination wallet addresses, especially for transactions over a certain size.
So this is for tax compliance.
And anti-evasion efforts. The UK government says it strengthens transparency without changing tax obligations, but requiring them to log and report all that wallet metadata is a big step up in government oversight.
And the sources frame this regulatory push with an underlying political motivation.
Yeah, reports indicate that this regulation is, well, it's motivated by a left-leaning administration that's pressing for tighter fiscal control.
And the implementation of digital IDs.
Right. For many in the decentralized space, this is seen as a pretty aggressive encroachment on financial privacy. I mean, maybe it's a necessary evil for institutional adoption, but it's a step backward for the decentralization maximalists. It solidifies the trend. The future is regulated.
Okay, let's shift gears completely to the intersection of AI, big tech, and the physical future. Let's start with a quick security update before we get into quantum computing.
Right, OpenAI. They confirmed a security breach recently at their analytical partner, Mixpanel.
What was exposed?
It exposed API user metadata, things like emails, usernames, browser info. But crucially, the sources confirm high-value data like API keys, payment info, and the data of just general ChatGPT website users were not affected.
So they're addressing the flaw.
They are, but it's a stark reminder that even enterprise-level partners can introduce risk.
Okay, now for the monumental tech news out of the Middle East. Saudi Arabia is making some massive pushes, especially with AI scaling.
Huge pushes. Magna is heavily investing, contributing to that $500 million GMI Cloud Taiwan AI factory. It's powered by 7,000 NVIDIA Blackwell Ultra GPUs.
But the real headline is quantum.
This is truly massive for the region. Aramco and Pascual have deployed Saudi Arabia's first industrial-use quantum computer in Dhahran.
It's the Middle East's first such system.
A major step toward their Vision 2030 digital transformation goals.
So the system is operating in the 200 qubit range. For you listening, the immediate question is always, does this threaten crypto encryption? Are my Bitcoin holdings safe right now?
And the reassurance here is strong and definitive. No.
Okay.
This is not an immediate threat to modern encryption like ECDSA, which is what Bitcoin uses.
And why is that technical barrier so immense?
It comes down to error correction. Quantum computers are extremely sensitive to, well, to noise. So while this system has 200 physical qubits, breaking current cryptography with something like Shor's algorithm, that requires millions of logically error-corrected qubits.
Which is a massive leap from where we are today.
A huge leap. The consensus is that the cryptographic threat is still 5 to 10 years away, maybe even a decade or two. In fact, traditional financial infrastructure, Your bank passwords, your ATM pins, that's all at greater risk first.
So if this 200-qubit system isn't an immediate threat, what's the actual real-world benefit of deploying it now?
It accelerates what we call early government readiness. By deploying an industrial use system now, even if it's just suited for specific problems like optimizing oil and gas exploration,
It puts the pressure on.
it pressures institutions and governments to speed up the development of quantum-safe encryption, post-quantum security. This move positions Saudi Arabia as a regional quantum leader and ensures the infrastructure to protect crypto in the long term is being built today.
This has been a true deep dive all the way across the digital landscape.
It really has.
We started with the psychological impact of Michael Saylor's green dots, tracked market sentiment hanging on Jerome Powell's decision,
Analyzed El Salvador's move to use Bitcoin's immutability for accountability.
and explored the future of finance with Nasdaq's structurally disruptive tokenization efforts.
If we synthesize the overarching tension here, across all these sources, you see a clear shift in momentum. The focus is rapidly moving away from those early decentralized dreams.
The Wild West of DeFi and NFTs?
Right. It's moving toward enterprise-grade, regulated, compliance-focused applications. Tokenization and the UK's aggressive reporting framework, they just confirm that institutions are formalizing this space into a new, efficient financial system.
What really stands out is this constant race between technology and centralized control. If powerful technologies like quantum computing and institutional tokenization are accelerating the centralized implementation of data and compliance, here's a final provocative thought for you to consider.
Okay.
If the efficiency gains of tokenization are just irresistible to institutions and governments are prioritizing oversight, is the future of digital assets inevitably more about permissioned finance? Or can the underlying security principles of public blockchains like Bitcoin maintain their decentralized promise against both institutional and technological evolution?